Hey Bryce, what did you get your mum for Mother's Day?
Mate, to be honest, I just sent her a text message.
Oh no,
Yeah.
that's terrible, man. Well, you know what you
Yeah.
should have done? You should have done what I did. You should have gone on to equitymates.com/stake, signed up, and got your mum some shares.
What are you talking about? You can't go and buy your mum's shares.
Yeah, mate. With stake, you can gift shares to other people.
Mate, that's not bad. So how does that happen?
So all you have to do, go to equitymates.com/stake, sign up through our website, get yourself a free $25 when you fund your account, and then you can go on and buy shares for other people. So I bought my mum a nice little parcel of Apple shares for Mother's Day.
Nice, an apple pie.
Yeah. I've been on them for a while about starting investing, and I thought, you know what? Why don't I just take it into my own hands and get them started? So you can do that too.
That's actually probably one of the coolest presents I've heard about, Ren. So all I need to do is head to equitymates.com/stake. I'll sign up to an account and then fund it. And then they're going to give me free brokerage on any transaction in the US and $25 into my account. And then I can send Apple or Amazon or any stock in the US to my mum for next Mother's Day. So that's going to be better than sending a text message.
Mate, if I hear about you sending a text to the lovely Anne next Mother's Day, I'll be having a stern word with you.
Mate, I'll make sure I sign up to stake before that happens.
That's what I like to hear.
Nice. That's equitymates.com/stake for free brokerage, $25 into your account.
Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in 15 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm good, Bryce. How are you?
Very well, thank you. So we're back with a part 2. We kicked off part 1 last episode, and we've come back to continue on what is a journey of trying to think like Warren Buffett. So
yeah, well, that's my constant life journey, but
yeah, you'll get there one day.
Yeah. Any advice is appreciated.
Yeah, so for those that are joining us, we're just going to get stuck straight into it. We have decided to answer ourselves 9 questions that Warren Buffett looks to answer himself when he is trying to choose or looking at researching a stock. Now, these 9 questions came from a book that I'm reading and Ren has read called Buffettology, which is by Mary Buffett, who is his daughter-in-law. Is that right, Ren? Yes.
That is right. Nailed it.
Yes. His daughter-in-law, and through such close access to the man himself, she's decided to she has written a book explaining the techniques that have made Warren one of the world's most famous investors. So
I think you can say the world's most famous. I don't think you need to say one of.
Okay, good. The world's most famous investor. So Ren, let's do a very quick recap on last week. So we've both chosen a stock that we are going to answer these questions against. What was your stock?
My stock was ResMed.
And briefly, for those that have just joined in on this, what does ResMed do?
They make medical devices that help people with sleep apnea sleep better.
Okay, interesting. Good. And you said you had a caveat.
Yeah, so I've got to come hat in hand today. I gave some figures that we'll go through in the questions, but my figures were the Australian ResMed listing. It's also listed in America. I was doing some more research for this episode, and I just figured it was dual listed. So when a company's dual listed, it reports the same information to both markets. It's actually not dual listed. What it is there's some weird corporate holding structure where ResMed in Australia is worth 1/10 of ResMed in America. So all of the numbers that I gave, multiply it by 10 and then adjust it for the US AUD exchange rate, and then that's the ResMed numbers. So
proportionately and percentage wise, it's the same. It's just in terms of dollar figure, a lot less than total ResMed.
Correct. So what it is like the earnings per share numbers that I gave are based on the 1/10 structure and in AUD rather than USD, but the growth of those numbers, the percentage change, that reflects the American one. The American one factoring in the exchange rate fluctuations as well, I guess.
So do you think that's changed your opinion on where it was sitting in answer to the questions last week?
Nah, not at all. But this week, I'll be using the American data rather than the Australian data. So apologies for all of that. But, that just teaches everyone, don't take trading advice from a podcast.
Well, do, but...
No. Don't take advice.
Don't believe everything
Listen to us, but don't take our advice.
No. Well, luckily we didn't give any advice last week.
No,
so that's
we never
good.
give advice.
No. Great. So my sleepless nights, I was wondering why it was, and that was because you'd cooked the numbers last week, so I can sleep well this week.
Well, you know what? Not a lot of people came to us pointing out that error, so I'm thinking that people aren't taking notes as we're talking and then following up and doing some homework afterwards.
Or no one's listening.
Yeah, that's probably more likely.
Well, that's good to know, and I guess... would that be the same for BHP, for example, because they list in London?
Now, I haven't researched this one, but I think that's a legitimate dual listing.
Right, okay.
I'm going to Google it now. And while I'm Googling it, do you want to tell us the company that you talked about last episode?
Yeah, sure. So there's actually been some updates in the company that I picked last week. So I chose Boral Limited, ASX ticker BLD. So if you want to check it out, BLD on the ASX or Google Finance or whatever it is. And it's an international building and construction materials company based in Sydney. So it has businesses in cement and construction materials, plasterboard, bricks and roof tiling. And that spans across Asia, Australia and the US. So some pretty big markets, as I said last week. But interestingly, in the last week, it's come out that they are going to be selling their concrete and quarries business in the US, and they've owned that since 2004. They're going to be selling that off for about $45 million US. So they're actually going to be reducing the number of concrete and construction materials businesses that they're in, and I guess focusing more on what could potentially be more profitable businesses. So that was an interesting development.
Yeah, very interesting.
So,
hold on, before you move on, does that make you more inclined or less inclined to go for the stock?
I think it makes me a little more inclined to go for the stock. I haven't really given too much time to researching the ins and outs of the decision for this, but if it means that they're going to put that $45 million to good use, which we'll talk about a bit later, and if it means they're able to focus their energies more specifically on areas that are going to give them more growth or are more profitable, then that's always a good thing. I'm sure they wouldn't be doing this for a rash decision. So, yeah, I would be more inclined.
Fair enough. And just in case anyone was hanging on the edge of their seat, BHP is dual listed in the UK and Australia.
Nice, Ren. That's some good Googling skills in the background.
So if our favourite BHP shareholder out there, Harriet Alexander, is listening, she's got a dual listed company.
Okay, so... last week, Ren, very briefly, we looked at 4 questions that Warren asks himself. The first one, does the business have an identifiable consumer monopoly? The second was, are the earnings of the company strong and showing an upward trend? The third was, is the company conservatively financed? And the fourth was, does the business consistently earn high rate of return on shareholders' equity? Now, we're not going to go into all of those. If you want to hear the answers, we will point you towards the previous episode, but that's what we discussed last week. So, Ren, let's move on to part 2.
Yeah.
And this is where Warren starts to look at what do businesses do with their earnings, and how do they distribute their earnings amongst shareholders? Do they retain their earnings, and what that means from his perspective? So question number 5 is, does the business get to retain its earnings? Yes.
Now, what we mean by that is, does the money that the business make, so after it, the money it makes, less all the operating expenses and stuff like that, the earnings, the profit, does it get to keep that? Or does that have to go to, interest expenses and tax income, other stuff like that, writing down assets, all that.
Yeah.
So for...
Also, just before you jump into that for ResMed, I think it's important to point out here that one of Buffett's biggest loves in life, I guess, other than his family, is compounding.
Maybe even
He
more
loves
than his family.
Yeah, probably even more than his family. He loves the concept of compounding, and this is where he really starts to get into the nitty-gritty of compounding, because if you retain your earnings and don't pay them out to your shareholders, particularly at a high percentage, then that earnings goes back into the business and you can compound on compound. And Mary says in the book, we want to invest in businesses that can retain their earnings and haven't committed themselves to paying out a high percentage of their profits as dividends. This way, the shareholders can benefit from the full effects of compounding, which is the secret to getting really rich. So, Ren, does ResMed retain its earnings?
So ResMed does retain some of its earnings. It does pay a dividend. And so using the F17 annual numbers, it made about $2 billion in revenue. From that, it had a gross profit of $1.2 billion, so that's pretty good. Then taking away, research and development costs, admin expenses, writing down assets, stuff like that, it had a bit under $500,000 left, and it kept most of that. So it paid out a bit in dividends, but it kept a fair chunk of the money that it made in F17.
Okay, good. So you would give that a pass?
Yeah, definitely. In the most recent quarter as well, Q3 2018, the business had $590 million in revenue and it kept about $150 million. So you'd be pretty happy as a ResMed CEO seeing that much money go back into the business.
Yeah, absolutely. Well, that's good to know. So that's a pass for ResMed. So Boral pays a dividend of 27 cents. However, they do retain a fair bit of their earnings. They have been increasing the amount of retained earnings that they keep each year. Last year, in 2017, they had retained earnings after paying out $226 million in dividends. They had a retained earnings of $1.15 billion. So a fairly significant chunk from their profit. I actually don't have the profit in front of me, so forgive me for not having that on hand. But from memory, that's a reasonable amount of the profit that they kept. I think they made a profit of $1.5 billion, paid out $226 million, and kept the rest. So the interesting part, though, Ren, is last year they paid $150 million in dividends, and this year they paid $226 million. So it's quite a significant increase.
Wow, that's pretty good.
Just off topic really quickly, I saw on the balance sheet for Boral that goodwill is worth $2.2 billion to them.
Wow. Is that...
Yeah.
Wow. I wonder how you calculate that.
I know. Up from $213 million the year before.
Okay. So people like them a little bit more.
Yeah, but I mean, that kind of feeds into the first questions we were talking about in terms of consumer monopoly and stuff. Like maybe their brand is, as you were saying, much more powerful than I originally thought.
Yeah, that's why when you sometimes work looking at like return on assets and stuff like that, value investors only look at net tangible assets because that strips out things like goodwill and stuff like that.
Yeah, all that airy-fairy stuff.
Yeah. We just care about bricks and mortar and land and, the good stuff.
So for those that are new to investing, if you want to find out the dividends and retained earnings, that's all in the cash flow and the income statements that you can find easily online for any of the companies that you're interested in. So that information is all public and available. So question 6, Ren, how much does the business spend on maintaining current operations?
Yep. So
is this important, do you think?
Yeah, so this is definitely important. And basically what this means is related to the last question, but, how much does it cost to run the business? If all of the money that you're making goes back into, plant and equipment and paying your team members, and there's nothing left over for shareholders at the end of the day, then that isn't a great recipe for, long periods of growth over time and compounding your business's growth. So looking at ResMed, last year they made that $2 billion in revenue, and the cost of those sales was about $800 million. So their gross profit was left at $1.2 billion. So the cost of their sales, the cost of running their business, the bulk of the cost of running their business was less than half of their revenue. So you'd be pretty happy with that.
Yeah, you would be, absolutely. So just going off what you were saying there, Ren, I'll just read something from the book for everyone. So Warren wants a business that seldom requires replacement of plant and equipment and doesn't require ongoing expensive research and development. He wants a company that produces a product that never goes obsolete and is simple to produce and has little or no competition. For example, the only newspaper in town, a candy bar manufacturer, a chewing gum company, razor blade, etc. So these are, predictable products and predictable profits. So Boral, I don't think necessarily fits into that. They have operating expenses of $3.9 billion. And I think, they have to spend a lot on continuously purchasing these commodities. I don't think a commodity business falls too well into this. Would you agree, Ren?
Yeah, definitely not.
No. So they have a huge sort of capital requirement to keep their business running. So $3.9 million spent on running the business. So I would suggest that Boral would not answer a yes for Warren's question in this case, due to the nature of it being a commodities business.
Fair enough.
Okay, Ren, so I know we've only done 2 questions here, but we had a bit of a chat at the start there, and we do say you can learn to invest in 15 minutes or less, and I'm sure we're approaching that time there. We've got 3 questions to go, so we're going to go away and research them and come back to you guys next episode, where we're going to wrap up the 9 questions that we're going through with Buffett, thinking like Buffett, and see who's come out with a better choice of company.
Yeah, definitely. Can't wait. And if you haven't gone out and bought Buffettology yet, you should. And hopefully the next episode will convince you.
Absolutely. You can find it on our website, equitymates.com.
Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks, and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested-related content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. We hate spam. It's once a week, and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mind.